Well, so here we have it. We have a plan that's full of loopholes for the favored few and gives almost nothing to those in the middle and raises taxes on the poor. Not much of a plan by my lights, especially because it makes it so much harder to balance the budget. And when you look at all the loopholes here in the plan, some of the reporters and commentators who have looked at this, they've said, gee, isn't it odd they're proposing all these new tax breaks and at the same time they've got their flat tax proposals? Isn't that inconsistent? Because the Republicans are claiming that their flat tax proposals are loophole-free. Well, actually, the two are one piece. The flat tax is just this tax bill writ very, very large because it is not loophole-free. In fact, far from closing loopholes, the various flat tax plans, whether the billionaire plan or the millionaire plan, they don't close loopholes, they open up new ones. For capital gains, the loophole is 100% deduction. For dividends, a 100% exclusion. For interest, 100% tax-free. Wages and fringe benefits, on the other hand, are taxed. Fringe benefits from $1. So we're not talking about closing loopholes when we talk about these flat taxes. What we're talking about is taking the existing loopholes and consolidating them into one giant, all-encompassing loophole that will make it very clear that the richest people will pay very little in taxes. And that's why these flat tax plans are such a huge shift in the tax burden away from the well-off and onto the poor and the middle class. In December, Treasury analyzed Dick Armey's most recent revision of his tax plan, and it found that at the 20% rate that Armey proposes for the first 2 years, almost everyone's taxes would go up sharply. In fact, every income group except those over $200,000 a year would experience tax increases under the Armey plan as proposed, and those tax increases would be in the range of $1,000 or more a year per family. This is a bill at 20% rate that loses revenue, loses $30 billion or more every year, and still manages to raise taxes on 97% of the population, according to the Treasury Department. How does it manage to lose money? Well, it gives those at the top an average tax cut of $34,000 each. Now, of course, Armey says he's going to lower his tax rate to 17% in 2 years. After the 20% has socked people for 2 years, he's going to lower it to 17, he says. Even so, the 3/5 of families who make less than $50,000 would still pay higher taxes because of his new taxes on fringe benefits, because of his repeal of the Earned Income Tax Credit, and other provisions in his plan. Meanwhile, once his plan goes to 17%, it costs $138 billion a year, added on to the deficit. Impossible numbers. And then you look at these other plans. You got Malcolm Forbes Jr. He's going to have a flat tax of 17%. His plan, based on Treasury's numbers, would cost $200 billion annually. Where is that money going to come from? The Kemp Commission just came up with an outline of a plan. If you plug in a rate and reasonable exemptions, their plan, because it doesn't tax even as much as Forbes does, looks like it would cost in excess of $300 billion. These are numbers they're almost lunatic. They're so large. You know, the current income tax, corporate and personal, only raises $750 billion, and we're talking about cutting it by $200, $300 billion a year. Where is this money going to come from? Well, Jack Kemp says we will grow our way out, and Phil Gramm says we will eliminate most of the federal government, and none of those things are plausible. The public doesn't want them. And when the public discovers that these flat tax plans are a fraud, that they in fact raise middle-class taxes substantially, they will reject them, just as they've rejected the flat tax in the past. Now, I just want to conclude by saying that no one would ever deny that we do need tax reform. We need changes in our tax laws. You always have to. You can't just enact a tax law and go away, because the lawyers and accountants will catch up with you eventually. And they have since we made a lot of progress in 1986 at making the tax code fairer and more making it more intelligent. But since then, loopholes have crept back in, and the smart folks have found some ways around some of the reforms. And we need to do something more to make the system fairer. Not open up new loopholes like the Republican tax plan that's pending or the flat tax, but closing loopholes that are unwarranted. Last April, we put out a detailed report on all the hidden entitlements that are buried in our tax code. including ones we particularly focused on as being bad economics and unfair, that cost $730 billion over the next 5 years directed towards corporations and high-income people. And they range from multinational tax breaks to capital gains loopholes to tax breaks for mergers and acquisitions to accelerated depreciation breaks and oil and gas breaks. It's a long list. $730 billion worth of these over the next 5 years, and yet they weren't on the table when the Republicans started looking for ways to balance the budget. We should put those on the table. Senator Daschle's budget reduction plan, which President Clinton has at least sort of endorsed, has a lot of the kinds of reforms in it that we need in the tax code. If we did those, then we might be able to do something for middle-class families that would make sense. So I hope that the members of this panel and that the public at large will demand that we have a budget balancing plan that asks those who have the most to contribute something to balance the budget, not shower new tax breaks on them while soaking everyone else. Thank you.